All right. Good morning, everybody. Good morning, Daniel, Luciano, Adam, New Mexico. Good morning. Nice to see you guys today. Hope everybody's doing well. Good morning, Safia, all the way from the other side of the world. Isn't it amazing what technology can do? Ron C., good to see you. Good morning, Zeba. Oh my goodness. Hope everybody's doing well today. I'm excited about today. Should be a mover, I'm hoping. Yesterday, hey, Mohammed. Yesterday tested our patience bone, didn't it? And that happens sometimes. Sometimes you're going to get a market that gives everything, and sometimes you're going to get a market that gives nothing. Was it a good game, Gary? True story. I was so bad at basketball when I was a kid that it just killed any desire I had to watch it. He got the grass cut. The women are playing great ball. Very nice. Very, very nice. I just can't get into it. I've tried. Can't do it. But that's okay. I don't have to. They'll still go on without me, right? Guys, my name is Mark. I did. I was the perfect age for that. And even as spectacular as he was, Gary, it's just not my thing. Um, it's like when somebody loves a food that you don't like. They're like, man, you have got to eat this apple pie, Mark. This is the best apple pie in the world. Guys, I hate apple pie. Doesn't matter how good it is. It can be the best one in the world, but it's still apple pie. So it's okay. For those of you that are brand new, now I'm an American. For those of you that are on demo, for those of you that are striving for consistency, for those of you that are looking to put yourself in the best position for success, welcome to the education room. This is your room. My name is Mark Novak. I've been teaching this room for about 2 years now. And I absolutely just thoroughly enjoy what I do. And we're going to focus a lot today on rules and advantages, and then turning those advantages into a potential trade, and not the other way around, not looking for a trade. We're going to look for rules to be met. And that's really what's going to push you in the right direction. A couple things. See, Zeba, nobody gets it. Um, Nobody understands my disdain for apple pie. I love the smell. It's my favorite smell in the world. True story. But can't stand the way it tastes. Cobblers, I should have never been brought up in the South. I don't eat cobbler. I don't eat pie. Just not my thing. Put me in a room with cake. Guys, no sound? Can anybody hear me? Give me a Y if you can hear me. Sometimes it's not me. Let's find out. Nobody? All right, let me see. All right, guys, how about now? Can anyone hear me now? No sound? All right, I'm gonna log out and log in. You guys can't hear me, so. All right, guys, I'm back. Can you hear me now? You know, it was kind of funny. Right as I was trying to see if you guys could hear me, Discord booted me off. I was about to reboot it and it gave me a preemptive booting. Next gen Ben. That's pretty much it. Pretty much it. All right, guys. So let me do this again. I'm Mark. Been teaching this room for a couple years, guys, and I'm excited to teach you. We're going to keep it focused today. Actually, that's not true. We're going to go all over the place today because you guys are going to ask a million questions, I hope, and we're going to find answers for each and every one. And that's exactly how this room works. We're going to take the first couple 30 minutes or so Really? Gone again? Actually, no, let me check all of my connections. All right, guys, we're going to try this again. I just completely rebooted. Are we good? You're going to put me on button restriction. I might need it. Any sound? No. All right, hopefully third time's a charm. Are we back? All right, that was a full reboot, guys. So fingers crossed. They're going to make me earn it today, it looks like. That's okay. Kind of peaceful, Ron. Killing me. Killing me, killing me. Was there elevator music? Wouldn't that be great? Intermission. I like it. All right, guys. So let's get some classroom going before they boot me again. We're going to focus heavily, guys. We're going to talk about rules today. We're going to talk about patterns. We're going to talk about all the things that are going to help you be successful as you begin to learn the indicators. And I always focus around the basics, simplicity. And I say it, and not everybody always believes me. But we're going to keep it super simple. But before we do that, the first thing that I want to do, guys, is I'm going to forexfactory.com and I'm looking at their calendar and I'm making sure that there's not some crazy news that's going to rock the world and change the way the market flows, make it erratic, make it just jump and bounce. Today is Tuesday, March 28th. At 8:30 a.m., we had low impact news. You'll notice it didn't move the market too terribly much. At 9 a.m., we have a little more low impact news. It always has the potential to make that market bounce. But at 10 a.m., you can see that red box. We have consumer confidence and the Richmond Manufacturing Index. This is both high and medium. Guys, it's not uncommon to expect a big spike in the market when this high impact news comes out. So I'm not saying trade what the news says. I really don't care what the news says, to be honest with you. I pay attention. I'm aware. I look at the time. Because the reality is I can be in the best, highest probability trend trade in the world, and it may just go the other direction, 100 points without any notice at all. And that's what happens when people react to news. So each morning I check that. That's as my charts are loading. That's what I'm looking at. And then, guys, everything that I'm going to talk about today, you're going to find from the syllabus. This is the tutorial section, and I like to point out that the URL for the tutorial section ends with building a foundation, and that's exactly what we're going to focus on today, is creating a foundation, this solid platform that you guys can use to grow. And that solid platform is very much one trade. And I think people underestimate just how much knowledge there is to be had in one trade because it's a high probability trade. And it's defined as when each indicator on every chart agrees with the rules for the trade. And typically this is when your triggers are the strongest, no termination conditions exist, and there's no trouble spots between your entry and your target. Guys, this high probability trend trade that we're going to speak about in the first hour of Classroom is a trade that has been proven by you guys going back trying to prove me wrong to typically win between 70 and 80% of the time. The high probability trend trade is going to teach you to recognize advantages. It's going to be very specific on what you're looking for to enter the market. But the reality is the high probability trend trade. Hey, Christina, long time no see. The high probability trend trade is going to teach you to read your charts, guys. And we're chart readers. It's more fun to say, hey, I'm a day trader, but the reality is you're a chart reader, because 90% of what you do will be reading the charts, and 10% of what you do is going to be taking the advantages and turning them into a trade. Chart reading mastery incorporates three essential elements: where the market is likely to continue, and this will be your point of entry for that high probability trend trade. Where the market is likely to go, this is going to allow you to use Fibonacci, to use momentum for profit targets, and where the market is likely to stop. And these likely to stop areas are places where the trend may end. So if we're looking for a high probability trend trade, understanding where the trend ends becomes a huge advantage. I always encourage new users, and guys, nobody is under any obligations to listen to me, but I encourage you, for your first 30 days, for your first 20 trading days, focus on this high probability trend trade. And what it's going to do is, when it teaches you to read those charts, to understand those advantages, your high probability trend trade, your ability to read charts, is going to open doors for you. And it does so by giving you a medium probability trade. And this is when most of your indicators line up for a trade. However, a small issue exists. I want you to notice that that small issue is singular. It doesn't say, once we can read charts, we'll take everything and hope for the best. But this will be the vast majority of your trades. And when you're executing these trades, you're going to need to manage them assertively. And your ability to read charts right there in the moment is going to allow you to manage them assertively. And if there's trouble in your way, your chart reading is going to identify that trouble. You may take a portion of the position off at that spot, reduce risk to a zero loss level. But it's your chart reading that's also going to help you identify that small issue, recognizing when one of those advantages are gone. So we're going to keep it simple first. It's funny, I actually have this picture, and it's labeled Rules Simple. That's the name of this picture. 3 rules, guys. We are going to give ourselves 3 rules to provide 3 advantages. And those 3 advantages give us the equation for a trade, the recipe for a trade. A trade is nothing more than momentum, a clear path, and an entry area. And the 3 rules provide each of those advantages, and that does it on only 2 charts. Once again, harness yourself in, keep it simple, let it be 2 charts, and what's going to happen is, when you can read an indicator on a 13.2, you can make that same read on a 5.1, on a 21.3, on a 34.5, on an 8 range, on a 34 range, on a 13 range, on a minute chart, on a day chart, on a stock chart, on a cryptocurrency chart, on an options chart, guys. So we're going to use the 13.2 and the 5.1 to learn to read our charts, and then understand that that skill set is going to carry you over to any arena you want to be in. And on that 13.2 chart, on your largest chart, this is a broad stroke of a brush. This is really taking the general temperature of the market, understanding which direction the market is trending. And it's very simple using the background color. If the background is green, we're in an uptrend. And giving yourself the advantage of trading with that trend means that you're only looking for high probability trend trades long, looking to buy the market. And if the background is red, well, we're in a downtrend, and you're giving yourself that advantage of going with the trend by only looking for high probability trend trade short. Your first rule that provides the advantage of momentum happens on the 13.2. You're going to be able to identify by the end of today, even if this is your first day, you're going to be able to identify when you have that advantage of momentum by using strong triggers. By the end of the day today, you should also be able to recognize that there's no termination conditions present, allowing you to understand and recognize the advantage of a clear path. Guys, this chart is a broad stroke of a brush, and this broad stroke of a brush is just the general temperature. Once we have those advantages in place, once you've identified the trend, once you've recognized strong triggers, when you can say, I have no termination conditions present, then you'll turn your attention to the 5-1. And the 5-1 is an entry chart. And this is where you're going to refine the broad stroke of that brush provided by the 13-2, and you're going to be able to pinpoint your area of entry. Guys, this is the point where the market is likely to continue. Rule number 3, the third of 3, happens on the 5-1. And this is where you're going to be able to pinpoint with such accuracy that you'll use a limit order to buy or sell a pullback, and we're going to use those Fibonacci areas, and we're going to allow them to be inside of large triggers. And by doing so, it's going to help you reduce risk, and it's going to help you maximize your profit potential. So guys, I want you to write it down on a piece of paper. I'm going to keep it simple. I'm not going to overthink it. I'm not going to create rules that don't exist. I'm just going to focus on the absolute best of the best. And the absolute best of the best starts with momentum. Good morning, Ed. Good to see you. On your 13-2 chart, when that background is green, when you're in an uptrend, the small triggers will be up and above the large triggers. The large triggers should be widening. And guys, it's the space created between the two that lets you know that the odds are favorable for the market to continue up. You're going to hear me refer to this in class a lot when we talk about your charts, when we talk about my charts. Do we have odds favorable momentum? Did we have a market that was showing us all of that strength, whether it's to the upside or to the downside, where the small triggers will be below the large triggers? The large triggers will be wide, they're angled in the direction of the trend. Guys, it's the space created that lets me know that I have that advantage of momentum. If you commit to the advantage of momentum, you're going to find that each and every one of your trades typically goes a little smoother. Because when those small trigger lines work their way back into the large, this is what we call a weakening of the large triggers. And you'll hear me refer to that weak trigger look as an anything can happen look. Weakened triggers mean that anything can happen up or down. You go from the advantageous momentum to the coin toss. So as you look for high probability trend trades in an uptrend, you'll be able to wait for those smalls to separate, to create that gap between the two. Each of these circles represents a potential entry for a high probability trend trade, and you'll see it on the 13-2 as a tail or a wick. Notice that we look for opportunities all the way until those small triggers return to the large, until they weaken. This is a very simple look to recognize. The smalls break away, they accelerate, the space is created, looking for those potential trade opportunities all the way until they return back to that anything can happen state. Guys, it becomes a very simple look. Give me a Y in the room if you're with me. This is your best of the best look. This is the look that should get things going, gives you that odds favorable momentum. Awesome. Pretty simple, right? 2 triggers. Think of it as scissors. Shogun, Adam, New Mexico. I know you're brand new. If you open scissors, they're ready to get some work done, right? You close those scissors, you can't do anything. Same concept. So guys, there's a picture for you too. I spend a lot of time putting pictures in the room for you because I think visually, when you see this stuff, it creates an advantage for you. All right, so rule number 1, knocked it out quick, right? Easy peasy. Rule number 2 says that we have to have the advantage of momentum. Rule number 2 says no termination conditions present. When those termination conditions are missing from the equation, we have a clear path. So again, straight from the manual. The termination condition is a Fibonacci-based indicator that may reverse the market based on a comparison of your Fibonacci area and the T3 trigger lines. And your areas become pretty simple. They are a divergence high, magenta line that prints from a high pivot. It could be a divergence low, a cyan line that prints from a low pivot. It can be blue Fibonacci support or red Fibonacci resistance. It could also be these 1-to-1s, these yellow 1-to-1s. And all you're going to do is you're going to allow price to reach the area, and you're going to look at whether or not your trigger lines have been able to get through the area. It becomes a pretty simple recipe. Price reaches support. Absolutely no trigger lines break through. This becomes an area likely to stop the market. No more short trades into that area. New users, that easy enough. Price reaches the area. If the trigger lines don't break, just be patient for a second. Either let it break or let the market reverse. But this right here, and you'll see it 50 times a day, termination conditions will keep you out of troublesome trades, not trading directly into an area of support or resistance that the trigger lines haven't been able to break through. That's your recipe for identifying a termination condition. Price reaches, where are your triggers? And I've got a picture for you guys that I drew up. There's 3 states of an area breaking or not breaking. The first one is price reaches resistance here on the left side. Notice that the small triggers as well as the large triggers remain below resistance. The area is not broken. There is no clear path. If you go to the far right, both the small triggers and the large triggers have broken through that area of resistance. You can see that it begins to act as support. We now have a clear path. Rule number 2 has been met. And then you're going to have one more look. And this is going to be your first medium probability trade look. When the small triggers break through an area with odds favorable momentum, well, this area has the potential to break. But it hasn't broken yet. So there's not a clear path. Notice that I didn't talk about the color of Fibonacci. I didn't talk about the color of the triggers. I didn't even talk about the background. Termination conditions are a simple comparison. Price reaches the area. If no triggers break through, you're not trading into that area. Once the trigger lines get to the other side, you have that clear path. If you have odds favorable momentum, guys, there's one of those tails, one of those potential entries. So I ask for yeses in the room a lot, guys, and I hope it's not becoming redundant. Give me a Y in the room if you're with me. Price reaches an area, in this case 1-to-1s, even with odds favorable momentum, because absolutely none of the trigger lines have gotten to the other side of those 1-to-1s. No more short trades. Now you're going to hope that an area breaks. You're going to wish that an area breaks. You're going to want an area to break. But the reality is, until both the small and the large get above this area of resistance, I don't have a clear path. And a clear path is the second part of the equation, guys. That clear path is what lets me know that there's nothing between me and my target. And without that clear path, I can't look for a high probability trend trade. Sometimes the market will close or will turn from a low. It'll turn from a high. Guys, there's nothing in the way. All of my trigger lines have broken through an area, and this market still rocketed up. I had odds favorable momentum. I didn't reach an area, and that market turned down. I'm going to give you guys one more termination condition to recognize. Remember, termination conditions, we're looking for those areas versus trigger comparisons. We're looking for that on the 13-2. This look, you're going to recognize on the 5-1, your smaller, faster chart. You're going to be able to recognize change faster on a smaller chart than you'll see it on the 13-2. And you're going to use 3 divergence in the same location to help you identify potential turns in the market. So for my new users, what is divergence? If you watch the videos, you've probably got an idea, or maybe you ran off for a cup of coffee mid-video. That's okay. I'm going to make it nice and simple for you. Divergence is a loss of momentum. And that's all I need you to remember, is that when price comes down and goes back up, price goes down and goes back up, and finally for a third time, if the negative number prints below, if this cyan divergence line prints out to the right, well, then I know that I've had a loss of momentum. The momentum of the market is not following price. 3 losses of momentum in the same area may terminate the trend. This look becomes even more powerful when my small trigger lines work their way inside of the large trigger lines. Remember, that goes from that odds favorable to anything can happen. It becomes more powerful still if that third divergence is higher than the previous, because now not only is momentum not following price, price can't exceed the previous pivot. It's a head and shoulders pattern. So you'll see this from the bottom, you'll see this from the top, and if you see these 3 termination conditions on a 5-1, it's going to help you identify that your large chart, your slower chart, may be turning. Guys, that's the only chart that I look for, or 3 divergences is the only termination condition that I look for on a 5-1. So far, so good. I'm trucking through, guys. If you need clarity, I want you to raise your hand, because I'm not going to lie to you. If you're brand new, you might have a question. I want you to put it in the room. Remember that this is a conversation. This is not a lecture. I am not your freshman biology teacher. If it's there, Thala, absolutely. Great question. Absolutely. Be happy to. And Thala, you'll see that on the 5-1 because it is that faster chart. So when we talk about the 5-1 versus the 13-2, and Shogun, absolutely, we'll talk about trigger lines. What happens in only 1 bar on your 13-2, guys, that broad stroke of a brush, is happening in maybe 15 to 30 bars here on the 5-1. So this is just moving faster, and you may get 2 or 3 pivots over the course of 1 bar, which means that if we see the divergences beginning to print over here, even though this is odds favorable and nothing in the way, we start to really recognize that slowdown on that smaller, faster chart. Does that make sense? Awesome. And guys, that's your path to success. Keep asking questions over and over. All right, trigger lines. Let's do a little review, Shogun. 2 types of trigger lines. You've got a small trigger line, right? It's a solid line. It's your faster moving line. You have a large trigger line. It's going to be dashed. This is your slower moving. These 2 work together to provide us momentum. And all we're looking for, Shogun, is a separation of the 2. When they're trending together, the momentum is waning. When they split apart, the momentum is advantageous. We have what we call odds favorable momentum. And trigger lines come into play in a couple different places. They come into play when we're talking about establishing direction of the market. When the small triggers break above the large triggers, the background paints green, letting us know that we're in an uptrend. When the small triggers break below the large triggers, the background paints red, letting us know that we've moved into. And absolutely, it's that separation between the 2 that lets you know that the momentum is advantageous. It's when they separate, when there's distance between the 2, that's your best of the best look, Shogun. That's the one that should be what starts every trade when you're looking for a high probability trend trade. And I just put a link in the room for you guys on the Discord channel, from the Discord channel, excuse me. One of the things John Novak put together about 2 weeks ago was an entire section dedicated to trigger reading. No problem, Thala. So I'm going to answer that one first with, where are we looking for termination conditions? On the 13-2, right? So we're looking for those areas, those lines that may stop the market on the 13-2. And as you get into the management of your trades, focusing on the entries is going to help create management. And Thala, we're eating an elephant. And I like to look at it this way. We are taking the most basic foundational approach right now and identifying an entry for a high probability trend trade. Once you begin to recognize these entries, once you're able to look at these entries, well, then you can start to use Fibonacci for potential targets. So let's go through the lessons that we had. Here's odds favorable momentum. Guys, give me a Y if you see it. Small's above the large are wide, they're angled. Do you notice how we reached an area and absolutely no trigger lines broke through? Textbook termination condition. And guys, then the market kind of bounces. You're going to see big fights at these key areas. Well, resistance holds. The market reverses. We get odds favorable. And look how it goes all the way down to Fibonacci support. So Thala, we can use, good morning, Bobby T. We can use Fibonacci for potential targets. If I'm in a short position, I can find that next line and I can say to myself, well, I'm coming into Fibonacci support, but look at that momentum. Maybe I'll let momentum decrease and then look for an exit at support. So when you're picking your exits, these lines become great opportunities for exits. And as you grow with the software, you may pick other ones. So no problem. So Thala, I love these questions because these are perfect. What kind of chart is your entry chart? If you have odds favorable momentum on the 13.2, right? If you have no termination conditions on the 13.2, we're only looking for an entry, right? We're not looking for fibs. We're not looking for divergence unless it's 3. So Thala, what you can do is you can utilize the momentum of the 13.2. You can utilize the key areas on the 13.2 to make decisions about where the market is likely to go, right? If you took a short right here and you entered right here, and I don't know if that was an actual trade or not. We haven't even talked about entries, but let's take a look. Thala, let's say that you got short right here at a midband, right at resistance, right at these 1-to-1s. You know, as you're entering the market, that that's my first potential trouble spot, right? So maybe a portion of your position comes off right here. You reduce risk. But you say because of this momentum, right? Momentum pushes the market. Maybe this is a good spot as well. Maybe I'll take off more of my contracts, if you're trading multiple contracts, at that next area. And then Thala, you've got 1, 2, 3 divergences in the same spot. This may be where you exit your position. No, it's not too many. What happens if I have a fib before that 13.2? So what if I'm short right here and I have a fib on my 5-1, but I don't have it anywhere else? Is that what you're asking? Yeah. Thala, is there anything about the momentum on this chart that says I should be scared of one blue line on an entry chart? Absolutely not, right? So we let the 13.2 lead the way. And guys, this is what you're going to do, is you're going to convince yourself, and let me show you a good example, Thala. You're going to convince yourself that these 1-to-1s are going to be a trend stopper, right? Let me show you where these 1-to-1s are on your 13.2. They are right there. See the arrow? These 1-to-1s happen right at the bottom of the bar. Look at the momentum. Look at the clear path. You know what these 1-to-1s did for you, Thala? They gave you a cute little bounce right up to a beautiful entry. Does that make sense? That's all that did, is it gave a little stutter in the market to get you to a great entry. And then who cares? Let the 13.2 lead, because the 13.2 says go. The 13.2 says clear path. This is the one that's going to help you hold for bigger moves. And when we start talking about management, and we'll discuss management a little bit, what you'll find is that you can take a very mechanical approach to management in the beginning as you learn to read your indicators in the moment. Ben said bingo ES. Guys, if you hear bingo, it means that Ben just hit his profit target. Ben used the advantage of momentum. He used the advantage of an area likely to break. And he used an entry inside of favorable large triggers to take him down to that next spot. I love it. And Ben's taking pictures of everything he does. So momentum, remember, that's your 13-2. The 13-2 leads the way. Clear path, that's your 13-2. The 13-2 lets you know that it's okay. And guys, now we're looking for an entry area. Now you're looking to refine that large chart and whittle it down to a spot to find an entry on the 5-1. So let's talk about entries. Rule number 3 says that we're going to use a limit order. If you're not familiar with limit orders, it means you will literally wait for the market to come to you. It means that you're going to be able to identify that area of entry before the market ever gets there, so much so that you'll have an order waiting for it. And you're going to use that limit order to buy or sell a pullback. And guys, a pullback is nothing more than a small retracement counter to the underlying trend. And let me show you a picture of that. What is a pullback? Well, when everything says up, when everything says clear path, for a long trade, you're going to want that market to make a tiny little retracement, to push down against the underlying trend so that you can enter. And your entries come from an area. Areas can be fibs, support or resistance, can be 1-to-1s, or it can be a mid-band. And the key is we want those areas to be inside of favorable large triggers. So when we put it all together, you're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. If you don't have that written down somewhere, it's a great thing to write down. But when everything says up on the 13-2, guys, when the rules are met on your 13-2 chart, remember, you have the advantage of momentum. There's absolutely nothing in the way. You've made the decision that it's time to look for an entry, and you're going to focus your attention on the large triggers. They should be up, wide, angled in the direction of the trend. Guys, you're going to hear me say the word favorable large triggers quite often. And favorable large triggers means that your large triggers, your synthetic triggers, are one on top of the other. They're trending together. They're angled in the direction of the trend. They are creating the smallest line possible because they're overlapping. Guys, that's your best trigger look. You're going to look at those triggers and you're going to identify the areas that may be near them. Fibs, mid-bands, or 1-to-1s. The rules say that we are going to buy a pullback. Remember, a pullback is a small retracement in price, counter to the underlying trend. We want price at the large triggers. Not just the large triggers, Shogun, but also at an area inside of those large triggers. So what we're going to do right now, what a perfectly timed question, is Shogun, you're going to identify your window of opportunity. When your 5-1 chart gives you a reversal bar, this signals the beginning of the pullback. I like to draw a box from the top of my triggers to the bottom of my triggers. And then I'm going to look inside. What are my areas inside? 1-to-1s, Fibonacci support. And this mid-band's probably going to be there when everything comes together because these triggers are working their way up. For a long trade, you're looking for your highest point of support to your lowest point of support. For a short trade, we're looking for your lowest point of resistance to your highest point of resistance. And the key is that they are inside of favorable, I'm typing as I do this, that's why I'm talking funny, inside of favorable large triggers. So guys, there it is right there. From the highest point of support to the lowest point of support becomes your window of opportunity, that area where the market is likely to continue. If it were a short trade, it would be from the lowest point of resistance to the highest point of resistance. Guys, this is where the market, because of the momentum, because of no termination conditions, is most likely to continue on with that trend. Your job is to right-click on your chart and activate a limit order right at the top of that window, maybe a tick or two above support. And then it's up to the market. It's out of your hands. You have the advantage of momentum because of strong triggers on the 13-2. You have the advantage of a clear path because of the no terminations on the 13-2. And now you have the advantage of an entry inside of favorable large triggers. Guys, Discord decided to kick me out for a second. I'm on my way back. I know you can hear me. I apologize for this. Discord is testing me today, aren't they? Coming back. Here we go. That's just to see if you guys are staying awake. Shogun, your order goes at the highest point of support. Your limit order is waiting for this market to come back. And if it collides with your limit order right there at 79.21, right at the highest point of support, you're in a long trade now. You've bought the market with the advantage of momentum. You've bought the market with the advantage of a clear path. And you've bought the market with the advantage of having entered at the top of the window. Shogun, it may go to the bottom of the window. It may go through the window, but what we found is that with those rules met, this is a trade that typically wins 70 to 80% of the time. I can put my stop below those areas, below those triggers where the market should not go. And I can tell you in my own trading plan, I'll take this trade 1,000 out of 1,000 times. Because this is typically the revolt. Absolutely. What are the conditions favoring you? And I always say this, guys. These are advantages, aren't they? The pictures, the words in yellow, these are advantages. The advantage of momentum because of strong triggers. The advantage of a clear path because of no termination conditions. Think of them as advantages. Advantages make you feel good. The advantage of an entry area where the market is likely to continue. If I break a rule, I forfeit an advantage. Once the market moves in the direction of your trade, you can reduce your risk below the reversal bar. And here's where you can use Fibonacci if they line up on those larger charts for potential exits. So your goal initially is entries. Remember we said we're eating an elephant here, guys. All that I've talked about this morning is recognizing the perfect entry. Recognizing the advantage of momentum. Recognizing the advantage of no termination conditions. And guys, remember everything that happens in one bar on the 13-2. Here's the top of my bar on the 13-2. We have a large trigger, the smooth running Shogun. This is your 5-1 large trigger. The square ones, this is your 13-2 large trigger. So what we find is that when the pullback to the large trigger lines up with both, and my 5-1 has an area inside, you have the largest advantage. When they're running one on top of the other, it creates a very small, very concise window of opportunity. Guys, you'll be able to use this picture to go back and study When you have odds favorable on the 13-2, when you have no termination conditions on the 13-2, you can circle one of these tails. Remember we talked about these are potential entries, right? If you circle the tail on the 13-2 and it lines up with an area inside of favorable large triggers on the 5-1, Shogun, do you see how all three conditions have been met? And then Thala, this one's for you. Can't we use a potential termination condition on the 13-2 as a profit target and not worry about these silly little one-to-ones? See how that works? So much strength here. These one-to-ones gave me a bounce to my entry, but I'm using these key areas on the 13-2 for potential targets. Guys, this is your high probability trend trade. This is your best of the best. It's not difficult. Uh-oh. It's the same on both, Luciano. You're going to right-click and go to your data series. You're looking for the plot executions. And then let's see if we can find the trade markers. Guys, your user guide off the education page is your how-to. You don't see it? Give me just a second, Luciano. I'll pull up my NinjaTrader 8 in the background. Guys, your job is to study. Your job is to recognize this look. What do you guys think? Smalls below the large are wide. They're angled in the direction of the trend. Smalls have smashed through the area. The large have not. And look how price pulls right back to resistance inside of favorable large triggers. And a lot of new users say, but Mark, there was a divergence there. Well, it's only one, isn't it? And I want you guys to think about this. Where are my potential entries? From the top of my triggers to the bottom of my triggers, right? From the lowest point of resistance to the highest point of resistance. This is kind of what I'm looking at here. Everything says down, everything says clear path. There's your first entry. And then it bounces a little bit, but I still have strong triggers. I still have a window of opportunity. Guys, this is the area where the market is likely to continue, and sure enough, it does. So it takes a little patience sometimes. All right, Luciano, for you, if I'm looking at NinjaTrader 8, and I right-click and I go to Data Series, and I scroll down, Plot Executions. You have text and number, do not plot, and markers only. Right here. So you'll want to click that. Oh, you did find it? Okay, cool. I guess I should look at the chat box, huh? You're welcome. Absolutely. Man, you couldn't have said it better. Shogun. The 13-2 leads the way. The 13-2 gives us the first two advantages. The 5-1 is just where we're going to refine it and find an entry. So now that you know the rules, the key is to go back and study, right? To create that recognition. This one's kind of ugly. We're at the tail end of momentum. It's a dynamic Renko chart. So 13-2 and 5-1 talk about how the bar is built. And Shogun, are you ready? I'm going to knock myself off of this educational pedestal. I'm not a tech guy. Not even a little bit. But if you check out the video, it'll go through and it'll talk about those dynamic Renko bars and how they're formed and what they mean. And this is usually where Cameron comes in and throws a picture of them, helping me out. Guys, I hate to admit it, but I'm not a tech guy. Right on. It's the same thing. So Shogun, they're all the same market, right? They're just different time frames. So you can look at a weekly chart, and then you can refine that weekly chart down to a daily chart, and you can refine that daily chart down to an hour chart, and you can refine that hour chart down to a minute chart. There's Cameron. Cameron, you are my hero. Thanks, Bobby T. So there's your picture, Shogun. I know that you're the IT guy or the tech guy, so that may help you out a little bit. But it's just like that. If you're used to looking at your weekly to get the overall temperature of what's going on, overall we're in an uptrend, right? And then you look at your daily, and even though the weekly says up, the daily might say down. So you're looking for everything to agree. And when everything agrees, life gets pretty easy. And that's all we're going to do. Oh my gosh, they're in the moment. This is your price going right now. 113.2 bar might take 10 seconds to form. It might take a minute to form. But see how this one bar is ticking up and down? Here at 4,004, that's the top of this bar. Absolutely, Adam. This pullback is the top of this bar. This pullback to support inside of favorable large triggers. Watch this if I put a circle on it at the bottom. Not saying that there's a trade, but didn't it pull right back to support inside of favorable large triggers? So what we're doing is we're taking this recipe, this one bar, and we're refining it into these multiple bars. When we have the advantage of momentum, when we have the advantage of a clear path, we're just whittling it down on a smaller chart so that we can reduce risk and increase our profit potential. Does that make sense, Adam, Shogun? How many divergences? Do you guys see it? 3 divergences in the same location. Small triggers haven't broken through the area. Large triggers are still below the area. Guys, there's no advantage of a clear path here from the high probability trend trade rules. Live market. No clear path. No reason to get long in an area of support inside of favorable large triggers. Rules are designed to keep you guys safe. Rules are designed to give you guys advantages. Thala, once again, if you took the short here, and this isn't just Thala, this is everybody. Give me a Y in the room. Do you see how price came directly to Fibonacci support? Absolutely none of the trigger lines have broken through. Isn't that an amazing exit? Impress your friends, guys. Thala, Christina, how on earth did you know that the market was going there? Well, I use Nexgen software. And I can use my chart reading to determine where the market is likely to stop. I can use my chart reading to determine where the market is likely to go. I can use my chart reading to determine where the market is likely to continue. And then, guys, I'm just going to follow 3 simple rules on 2 charts and take trades that typically win 70 to 80% of the time. Gary, resistance is acting as resistance, isn't it? I like it. Gary, price reached resistance. Small triggers didn't go through. The mid-band's there, but that's not what's stopping the market in the moment, right? We're looking at this termination condition just below it. Does that make sense, Gary? This is textbook 100% termination condition. This is textbook 100% termination condition. Guys, 90% of what you do is going to be reading your indicators. When you read your indicators and you recognize the advantages, well, then you'll take a trade. And was I clear, guys? I hope I was. That we focus on high probability in the beginning. Yeah. I know, and that's why I talk about it, Gary. You're usually spot on, but sometimes I like to point something out. Thala, I promise I will check every trade that gets posted. I promise, I promise. When I go through the rules, we talk about the rules, you guys give me a why and say, you know what, Mark, I feel good about the rules. Well, then we have a quick discussion about how are you going to follow your rules, guys. You're going to create a small little plan for yourself that does nothing more than define entries. Whoops. What's it going to take to get me in the market? Well, it's going to take odds favorable, no terminations, area for entry. Guys, I just put this in the room for you. Steal it. I want you to go back and circle those tails. I want you to see if they line up. If they do, I want you to put it into your spreadsheet. Guys, everybody has the spreadsheet. This was given to you when you downloaded software, but I realize not everybody realizes that they have the spreadsheet. So I'm going to share mine. I'm going to give this to you guys. This is my personal spreadsheet. My personal spreadsheet has 126, I don't know, that's math. That's so hard for me. 132 pictures of high probability trend trades, of those medium probability areas likely to break trend trades. My spreadsheet has ideas on management. Thala, this picture may help you. When am I holding for bigger moves? Well, when I have strong triggers. This spreadsheet has ideas, just chart reading, mechanical management for beginners, termination conditions. Guys, begin to fill this chart, the spreadsheet, with your looks. What are your best looks? Put a couple into your plan. Absolutely you can. Shogun, you want to know the easiest way to create recognition? Open up this spreadsheet, click on Luciano's perfect trend trade short. Strong triggers, no termination conditions. Haha, Bobby. Do you see that pullback to the area of resistance inside of favorable large triggers? It's perfect, isn't it, Shogun? Here's one from Gary. It's strong triggers, it's no termination conditions, it's a pullback to resistance inside of favorable large triggers. Guys, Dennis isn't even in the room anymore, but this is strong triggers and this is no termination conditions, and there's a pullback to resistance inside of favorable large triggers. So the idea is that repetition gets you guys to where you want to be, whether it's a short or a long. And guys, I just gave you 130 examples. The vertical black trigger line will autofill. That's okay. Let me find a vertical black line. Oh, right here, Adam? Cool. So yeah, what this is, all this is price going up and down. This is a single price bar. That's a great question, by the way. Watch the body of the bar. When the body of the bar goes below the halfway point, you'll see that body grow and you'll see that body shrink. If this bar were to form another up bar, that body would come all the way up here and I would end up with this tail. So what happened in the moment here, and maybe we can look at it a little quicker on a 5-1. Watch how the bar forms. They're all the same size. until you get a reversal bar. So if price from right here reaches 4001, this reversal bar marker, you'll see that this tail will form because it came to the bottom. If it returns back up, we end up with a tail. If it doesn't, we end up with another reversal bar. And you can see where price went above the midpoint of the bar, it ended up creating a tail to the downside. Does that make sense? So these tails may or may not form in the moment. And that's why we go back historically and circle them. We're not trading the tails. What we're trading is when we have the momentum, when we have no termination conditions. Let me find a great picture of it for you. We're not worried about the tail so much. What we're worried about is that area inside of favorable large triggers, because this becomes the point where this tail is most likely to form. Make sense? And guys, news is releasing. So my hope for you guys is that you'll go back on your 13.2 and you'll just start circling tails every time you see one. Every time you see a tail with odds favorable momentum with no termination conditions, I want you to put a circle on it. And if that circle lines up with an area of support or resistance inside of favorable large triggers, well, then you know that you have a rules-based trade. So what do we see live right now? The large triggers are down and the small triggers are up. Shogun, do you have odds favorable momentum? Adam, do you see how there is not odds favorable momentum? And if you're unsure about what odds favorable momentum is, you can always resort back. Well, let's see. For an uptrend, the small have to be above the large have to be wide. In a downtrend, it's going to look like this. So I'm waiting for that look on my 13.2. Does that make sense, guys? And until I have that best of the best trigger line look, there's nothing for me to do. My smalls are down, but they're on the wrong side. My background is green and this is red. And guys, we're just in a point where there's nothing for us to do. Not yet. Exactly. What a great safeguard, right? I'm not going long yet because I don't have momentum. And that's really the end of the conversation. I'm not going short yet because I don't have odds favorable momentum. When the smalls break above the large, the background goes green. When these smalls, if they break below the large triggers, then I'll get a downtrend. If you're only watching the 5-1, you're going, but Mark, wasn't that resistance? Well, yeah. But you're fighting the trend, you're fighting the direction, right? You don't have momentum. So we're going to stay in a holding pattern just for a minute. And this is where your brain goes into a process of if-then. If the market goes up from here, well, then these trigger lines are going to roll and I'll probably get odds favorable momentum somewhere up here. And if this market's going to continue down, well, these smalls are going to work their way below the large, right? And give me odds favorable momentum so that I can look for potential shorts. But until either of those scenarios happen, I don't have the advantage of momentum, right? I don't have the advantage of a clear path up because all my trigger lines are below resistance. Successful traders sit on their hands a lot. Successful traders know that the hardest thing for you to do is to do absolutely nothing when the rules aren't met. But if you get really good at that, you typically become a really good trader. Does that make sense, guys? Especially my new people. It's the Pro Wader Challenge. The trend is up. The small triggers are down. The large triggers are down but flat. There's just no trade to be had. We'll see what happens real quick. And then I'm going to take a couple minutes, go refill my water. And that's what it is. And guys, this is exactly what I was hoping would happen. I want you to see this. So, and this is especially for my newer users that get bored. Wasn't that an area of resistance inside of favorable large triggers? Do you guys see it? New users love this short. Whoops. "13" said no. "5-1" said yes. Nope. Shogun, everything starts on the 13-2. Remember, on the 13-2, we have to have momentum. We had none. 13-2, we have to have a clear path. Without momentum present, it doesn't matter. Rule 1 not met. And guys, there goes Discord. It's blinking on me again. I'll be right back. Here I come. So what these very basic rules do for you guys is they create the opportunity for you to feel comfortable with advantages. Those advantages give you a higher percentage win. And this is why we do the 2. Only 2, right, Shogun? There's only 3 rules. 13-2 has to give me momentum. If it doesn't give me momentum, I can't have a high probability trend trade. 13-2 has to give me a clear path. If I don't have a clear path, well, then I'm never going to look for an entry. And that's that third rule on the smaller, faster chart. So guys, I was kind of hoping that this would happen. The trend was up, but the 5-1 looked like a short, didn't it? When you get comfortable with the rules, guys, you'll never take this short. You'll say, well, my smalls are on the wrong side of my large. My large are down, but the small are above it. The trend is up. You avoid this loser. And now you start that process. Well, now if my smalls get above my large, now if my smalls break through this area, if all of these roll, if I get those areas, well, then I'll have a rules-based trade. But in the moment, we're just in a holding pattern and we're just waiting for advantages. The BCOS smalls are red in the green zone. Oh my gosh, what's a BCOS? Oh, it's because the smalls are red? So Thalip, it's a good question. Watch this. This was my trigger look. Right there. Do you recognize it as not being odds favorable? Because in order for it to be odds favorable to the downside, the smalls would have to be below the large, right? The large would have to be widening and angled down. And for it to be odds favorable to the upside, well, then everything would have to be green, wouldn't it? Man, if it looks like Christmas on your chart, guys, things don't agree. Does that make sense, Thala? So no matter how pretty your 5-1 chart is, Thala's got drunk fingers this morning. No matter how pretty that 5-1 chart is, if the 13-2 doesn't lead the way, it takes away your advantage. And that's all we're talking about this morning, guys. We're talking about advantages. And then it's just a matter of going back and recognizing when they're there. There's a tail. What's it look like? Holy smokes. Guys, this was crude oil. Odds favorable. Everything's up. Coming from a termination condition. Shogun. Who else was new in here? Adam. Jar Jar, are you with me today? Muhammad, everybody. Do you see how it pulled right back to support inside of favorable large triggers? Isn't that amazing? Guys, this is a pattern that repeats itself. Absolutely. And if it doesn't, if I double click to the properties, I can make sure that it attaches to all charts, set it as your default. And then what happens is no matter what I draw over here, I'm going to see it over here. So I can go through and I can line up. There's a lot of people sometimes when they take pictures, I know that there's some people that love to take a vertical line and put it over that bar and see where it comes up over here. Absolutely. So your job, Shogun, is to open up your 13-2 chart. Let it take up your whole screen. Look for odds favorable. Make sure the smalls are on the right side of things. Circle a tail. And just repeat that process. And then come back and see what it looks like on your 5-1. If it's a rules-based trade, what do you guys think about this one? Look at that momentum. Holy smokes. Look at that pullback directly to support. Guys, your job, does everybody have their TechSmith capture? Can we do this as a class real quick? Open up your TechSmith capture, guys. Shogun, Adam, who else has never posted a picture in my class? Do me a favor, let me know that you have this, because guys, the most important tool that you have as a brand new user is your ability to post your pictures in class and get feedback on everything that you do. Adam, do you have your TechSmith capture? Shogun, do you have your TechSmith capture? Awesome. So pull it up. Adam, if you go in your search bar, type in TechSmith, and it should be there. When you download the software, it's put on your computer. We do this because this is really the most important. So take a look and see if that one shows up for you. And if for some reason you don't have it, guys, here's a link. It's literally a 1.5-minute download. It's absolutely free, gives you everything that you need. I use typically in class Snagit. It's got more bells and whistles, but it does the exact same thing. But I want you guys to get in the habit of doing this every time you see this high probability trend trade. So after you go back and circle these tails and the rules are met, no worries, Ty. That's the beauty of it, isn't it? Is your plan doesn't have to be my plan. My plan doesn't have to be your plan. But once you create that foundation, what you're comfortable with, you'll make a decision on whether or not you're willing to take this trade. Because your first 20 days isn't about advanced trades. Your first 20 days isn't about being a rock star, making all this P&L, you know, tons of profits. Your job for the first 30 days, guys, is show me a picture of that beautiful entry. Show me that picture of the pullback to support or resistance inside of favorable large triggers. And what I like to do so that I get good at that window of opportunity is I like to draw a picture or a box from the lowest point of the triggers to the highest point of the triggers. No, Shogun, not at all. You look for odds favorable momentum. You look for no termination conditions, right? In the live market, and then you wait for a pullback. But if you're scrolling back and studying historically, absolutely. You're looking for the wick, circle it. There's that circle. See how I drew a box from the highest point of my trigger lines to the lowest point? I can create my window of opportunity from the lowest point of support to the highest point of support. That's where the market. Exactly. Only for review. If you do that trading, the market's going to be long gone by the time you get that wick. And let me give you, I've got a pretty cool picture of it for the tail. Because you just take this picture, right? Hit upload. When you click upload, it's going to give you that screencast address. Click copy. And then what I really want you to do, and guys, I'd love to see you post a picture in the room right now. Come to the room, Control V if you're in the pop out, just hit copy paste. If you're not in the pop out, drop it in the room. Let's talk about it. But what I really want to see on your pictures, guys, is I want you to use this call out and write why you got in. Why is this a trade? It's a trade because I have odds favorable momentum. It's a trade because I have no termination conditions. And it's a trade because I have an entry at an area inside a favorable large triggers. And what you're doing every time you write your rules on the chart is you're just reinforcing those rules. You're reinforcing the words, what they mean, what they look like, so that you can find that best trade. And then come to your spreadsheet and put that picture in your spreadsheet, guys. We'll just call it perfect loan. And build that database. That's your path, guys. Odds favorable, no terminations. If I'm drawing a window of opportunity, it's from my highest point of support to my lowest point of support inside of favorable large triggers. Guys, my job would be to right click. Whoops. My job would have been to right click, put a limit order in place, and wait and see if that market comes to get me. Give me a Y in the room if that makes sense to you. Odds favorable, didn't reach the key area, wait for a reversal bar. There's my area of support inside of favorable large triggers. Nexgen Ben, do you like it? Does it fit the rules? Well, let's see if it fits the rules. Is the market coming from a termination condition that creates a full reversal? Do I have odds favorable momentum? Do I have no termination conditions? Was there an area? Absolutely. Guys, let me give you a copy of this checklist. You can print that out, put it on your desktop, and every time you take a trade, you can police yourself. You can also take a picture before that trade is ever entered, and you can police yourself. Does it fit the rules? Termination condition creates the reversal? Absolutely. Odds favorable? For sure. No terminations, without a doubt. Area for entry? Absolutely. This is a trade that typically wins 70 to 80% of the time. All right, who are my math people? If I take 100, you don't need to, Shogun. You probably will. I want you to remember that the CEO wrote the software 25 years ago. The CEO has been actively watching patterns in the market for 27 years. I've known the CEO for 50 years. And I can tell you that what he does, I don't do. It doesn't suit me. What you're going to do, and guys, this is everybody. Oh my gosh, Shogun, he's got over 30,000 pictures on his computer. Over 30,000 pictures of patterns. He's probably created 3 or 4 days worth of video. I mean, probably more than that, probably hundreds of hours of video. He's been teaching this for 25 years. He's held seminars. This has been his life forever. And what's cool is he'll come in and he'll post and he'll show you guys what he does. He and I talk every morning. We talk about what he does. Guys, it missed us by a tick, didn't it? Son of a gun. It happens. So the reason that I teach things basic, Shogun, the reason that I talk about waiting for the advantages of momentum, of no termination conditions, can't we do it again? Strong triggers, small and large are both through the area. Let's draw the box. From the highest point of the triggers to the lowest point of the triggers, let's squeeze the box, guys. The highest point of support to the lowest point of support inside of favorable large triggers. Is it a rules-based trade? No matter what happens, does this one fit the rules? That's all that I care about. Guys, my first 30 days, I don't care about wins and losses. I care about 4 yeses. This is a pre-trade picture. Tie man, not a 50-50. You dig this one? This is all we're doing is just waiting for advantages, right? Waiting for the advantages. And if the advantages are present, then they'll have a trade that typically wins. I don't know why I thought of you. I was like, I wonder if Tie Man digs this one. I had a feeling you would. So guys, here's one of the realities of trading. If I take 100 high probability trend trades, should I expect to win every one of them? If I take 100 high probability trend trades, should I expect to see 100 victories? No. And if anybody tells you that you should, run. I'm anticipating losing 20 to 30 of those, guys, out of 100. But what I'm doing is I'm developing trust in the methodology. I'm developing trust in the look. I'm going through and I'm doing that study, and I'm looking at this setup so many times that I believe that I have a basis to let you know. And if you guys look at my spreadsheet, I've got perfect high probability trend trades that didn't work. Odds favorable, no terminations, perfect pullback back to an area inside of favorable large triggers, got run over. I don't control the market. The only thing I'm in control of is whether or not my rules are met. And there's a little excerpt from a Mark Douglas book. I don't know if you know who Mark Douglas is. But when you stop expecting to win every trade, when you stop expecting to win every trade, you start winning more trades. And when you stop caring about the result and more about the execution, well, then that's your start, guys. High probability trend trade from the absolute best spot, with the trigger lines giving us the advantage of momentum, with the trigger lines giving us no termination conditions, with the area inside of favorable large triggers. And guys, look at this. This may be, that's it. Follow the rules. Remove yourself from the outcome. It might take 5 minutes. It might take 10 minutes. You might get run over. You might win. But guys, this is from my own trading. Let me see if I can find it. I took one yesterday. I take a lot of pictures. Should be taking everybody's trade. Guys, odds favorable, breaking through the area, smalls outside of the large. I entered at the area of support inside of favorable large triggers, and it made me sweat. But because of the advantages on the 13-2, I held my position. I kept my stop in place. This was a nice $550 long yesterday afternoon. And the reality is I got absolutely run over on the one right before it. It happens, right? And look at this. It stopped me out low tick. Happens sometimes. So take the pictures, and your only concern in the beginning, guys, is did you follow the rules for entry? I mean both, Paul M. So there's two ways to look at it. Paul M., this is your best look. When they're overlapping one on top of the other, do you see how it makes a nice, tight, concise window of opportunity? This is your best look. But the reality is as you grow with the software, as you read it a little more, well, you may see instances where they're split a little bit, right? Look at how big, Paul M., my window of opportunity is when they're split, and look at how big my window of opportunity is when they're overlapping. Does that make sense? Which one do you want to put risk on? It may go to support, it may go to the one-to-ones. Yeah, but when they're concise and those lines come together, it kind of gives you warm fuzzies. And guys, sometimes that market's not going to do what we anticipate it to do. This is what I lovingly refer to as a cost of doing business. But I think if you ask anybody that's done the study, if you ask anybody that's taken these trades, that studied this look, and you said, hey, would you take that trade again, even though it didn't work? Safia, would you take it again? Ben, would you take it again? Tyman, would you take it again? Gary, would you take it again? Without question, absolutely, I would take that one again. Why? Because I know that it's typically going to win 70 to 80% of the time. And guys, you have to be okay with losing. When you stop expecting to win every trade, you'll stop worrying about the outcome so much. If your execution is perfect, then you gave yourself advantages. And that's all we're doing. New users, welcome to Nexgen. This is what we're going to do Monday through Friday. We're going to talk about rules. We're going to look at the looks that make the rules met. You guys are going to post your charts. We're going to talk about them. So what I'm going to do right now is I'm going to take a quick break because I ran 30 minutes over. Sorry, guys. Good first hour. When I come back, I'm going to start scrolling through, looking at your charts. We're going to talk about what you did. Do me a favor, when you annotate charts, guys, or when you post a chart in the room, this is for my new users especially. Let me find my picture for it. One of the things that I love is that you help me help you. Unless you've been in the room for a month or two, then I'm going to know what you're trading. As you're brand new, write your rules on the chart, guys. Tell me what you see. Tell me why you did what you did. Why did you have an entry here? What did the 13.2 tell you? Did you have strong triggers? Did you have no termination conditions? Was there an area inside of favorable large triggers? Talk about your rules being met. Reinforce those great lessons. Make sure you get that information on the chart, and you're going to get the best feedback out of me. Guys, I'm going to take just a minute and rest my voice. And then when I come back, we're going to start scrolling through pictures. If your rules are met and you take a trade, please post it in the room. If there's something that you want clarity on, guys, if you're brand new, if you're just learning and you're like, man, he was talking about termination conditions and I didn't really get it, but I don't want to be that guy that interrupts class. I want you to be that guy that interrupts class. I want you to be that lady that interrupts class. I want you to insist that I give you all the information you need to be successful. Guys, I'll be back in just a minute. All right, y'all, let's get into that second hour. I want to share with you real quick, just so you know my process. When you look at the education room here, I have to scroll up to get to your pictures. So if you ask a question about something that I'm talking about and I don't see it initially, I'm going to come back to it. I'm going to see it. But I have to scroll up to get to your pictures. So if I miss your question, I want you to do me a favor. Go, hey, Mark, you missed my question. And I'll always go back to it. It's never on purpose. I never miss them intentionally. And with that being said, we're going to see what we have this morning. I like to scroll up to the top. I can look at all the pictures of you guys saying, where on earth did you go? I can't hear you. And let's see who started us off today. I want to say Ed got us going today, so I'm going to scroll down to Ed's post. And when I click on it, up it comes, and we're going to talk about what we see in Ed's trade. We see small triggers through the area, coming off that mid band, smalls below the large. Everything says down. His smaller chart agrees. Everything says down. Look at his entry, guys. Right in an area inside of favorable large triggers. Takes quick profits. Takes profits once again. Guys, this was a trade, let's see, from 401. Took a half a point on the first one. That seems a little silly. That's okay. And then 2 points on the second, 2.5 points. Ed, nice trade. Gary, 50-50, perfect entry, money made, nice job. Same trade, same result, making money, guys. Trading with momentum. Trading from areas. Nexgen Ben took the same trade, pull back, perfect entry, everything said down, so Ben held a little bit longer. Nice trade. The exact same rules, right? Everything says down. There's that entry. Ben says, well, it's giving me another reversal bar. I still have odds favorable. I still have no terminations. And I still have an area of entry inside of favorable large triggers. Holds on to it when the trade is over. And there it is. The more time you spend learning to read your indicators, guys, the easier it becomes for you to hold these moves. The easier it becomes for you to show it. Thala, do you have Snagit? So there's two things. If you're using Capture, Thala, you're not going to be able to post your checklist on there. If you use Snagit, if you go ahead and upgrade and spend the $23, we'll do it on this one. So Snagit, and there's a free trial of it. Give it a try if you want. Snagit is about $63, but it allows you to put your checklist directly onto the charts. I think it's a great thing. It's got more bells and whistles. You can do everything you need to do with Capture. And guys, if you're in your first 30 days, keep it on Capture. Get in the habit of writing your rules over and over. It'll reinforce them. But I want to show you on Ben's trade, guys. Ben's trade is no different than Gary's trade. It's no different than Ed's trade. It's the exact same trade with the exact same entry. It's just a little longer hold based on what the 13.2 is saying. And it's not that he's taking different trades. He's taking more contracts on the best trades. And that's one of the greatest things about Nexgen is you can take that high probability trend trade, right? And then when you take that high probability trend trade, if you make $100 on a 1 lot, well, that's $1,000 on a 10 lot. Gary, you said you missed it. Odds favorable. Everything says up. Beautiful pullback to support. Sometimes we miss them. All right, Thala. Okay, Thala, are you with me? Awesome. So I'm going to go up and I'm going to do two things. First, I'm going to post your picture, but I'm also going to post your checklist. Because I think that your checklist was really well done. Did you have a good top or bottom? You said yes. Let's see if we can make this bigger. Nope. Did you have odds favorable momentum? You said yes. Did you have no termination conditions? You said yes. And then area for entry inside of favorable large triggers. Thala said, nope, I didn't have it. Thala said, I'm going to jump in when it gets beyond the areas. And that's okay, right? If that's your trade, that's cool. But look how it pulled right back to support. You had to sweat through all of that. You made less. You risked more. That rule number 3 would have got you in at the best spot. Does that make sense? Still a nice trade. And if you get in here and you say, oh, that's my best entry, you can still keep your stop where the market shouldn't go. But guys, there's nothing more frustrating than jumping into a trade and getting stopped out at the perfect entry. And I see that a lot. And I'm glad that didn't happen to you there, Thala. But rule number 3 just gives you that where's the market likely to continue. It creates that recognition. It makes it easier to manage. Great entries make manageable trades. And then Thala, that's not a bad stop, is it? Or not a bad exit? Right at a 5-1 fib. But look at what your 13-2 trigger said. When you get into 83 right here, odds favorable, absolutely nothing in the way. This is where you start letting that 13-2 lead the way. And it gives you an opportunity. Or you look for your re-entry because the rules are met. Nice job, Thala. Gary. Terminations. 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 I like it. Safia, let's see what you did. Safia says odds favorable, everything's smashing through. Perfect entries. Money all the way up. And then Safia, what happened here? You jumped in, and then you got stopped out at an area of support inside of favorable large triggers, didn't you? I love that I looked at Thala's. Hey, Rick D. Isn't your stop right at an area of support inside of favorable large triggers? Trigger happy? That happens sometimes, doesn't it? And on that 50-50 trade, once you get 2 divergences, you can really expect that deeper push. So you probably saved a little money by jumping out there. Nice job, though. Great recognition. And look at that entry. This is what I love. Look at this entry. Look how manageable it becomes. Look how easy it is to make money when that entry is perfect. Nice job, Safia. And I'll tell you guys, I go into proud papa syndrome sometimes here. Because you guys come in and you're like, Mark, what's a trigger? And then a week in, you start nailing these entries. And then 2 weeks in, you start exiting appropriately. And you do all these great things. It's fun to watch. It really is. All right, Safia, this one's you again. Ooh, that termination condition, right? Nice entry. You got lucky. It gets harder when you don't have a clear path, doesn't it? I said in class yesterday, I'm going to say it again today, everybody has their thing, right? Everybody has a rule that they tend to break in the beginning. My rule was termination conditions. So when I see you guys trade into termination conditions, Safi, I think you managed it beautifully. I think if you knew that the risk was there, you managed it beautifully. But I think it's important that you put no on that termination conditions. Ask all the stupid basic questions. But they're not stupid, they're just questions. What's your question? And guys, when you talk to yourself, pretend like you are your student. Would you ever hang out with a teacher that talked to you the way you talk to you? I wouldn't. Be good to yourself. And Safi, I see you typing. I'm assuming that there's a question that comes with this, so I'll hold off just a second. Guys, there are no silly questions. There are no stupid questions. If you're a student, you should have all the questions. You got a warning for use? Did you really? I know, Ben. Safia, are you ready for the answer? Price reached resistance, didn't it? How many trigger lines are above this line? That's okay. It's a termination condition. The smalls haven't even gone to, well, these are one piece. This is like a snake. You wouldn't say that if the top of the snake came in your house. So these work together. These have to be above the area. So they're not above this area. They're not above this area. They are above this area, but just based on the 50-50, Safia, isn't that 1, 2, 3 areas that haven't broken? Your large triggers are flat as a pancake. None of the triggers have gotten through there. So it doesn't matter if there's 1 line or 3 lines. There's only 2 lines here, but because the triggers didn't break through, it's a termination. Termination. Huh? It doesn't matter, does it? And I think that's what's getting people, maybe. It doesn't matter if you have odds favorable momentum if you're into a termination condition. Let me go back to a picture real quick. Embrace this recipe and it'll help you. Guys, the second you start going, it was a termination condition, but I didn't have odds favorable momentum, but. Well, there wasn't an area inside of favorable large triggers, but. Guys, your but means that you're willing to break your rules. And I know that all too well because I've done it. Middle one's 50-50. Absolutely. That's the look, Safia. That's that area with the potential to break. So you forfeited your advantage of a clear path on that one. And it ended up going down. And I love it straight from the direction, straight from the man. This is a good example. See how there's odds favorable momentum coming directly into 1-to-1s? None of the triggers break. The recipe for termination conditions, that idea that when price reaches an area and absolutely none of the trigger lines break through, keeps you safe. It's a safety thing. There's one from class. Even with odds favorable momentum, the second it reaches that area, sometimes you just have to sit on your hands for a second and wait for things to sort out. Second management question, it would have met target 2, but you moved it. Why did you move it? Did you have a reason to move it? That's what I always ask. Did you have a reason to move your target? What changed? That's what I ask myself. If my entry is rules based, what changed? The only thing on the 5-1 that's going to get me out, if my rules are met, is 3 divergences. That's it. That's the only thing that's taking me out of a trade. You thought it would print divergence. Man, Safia, I thought I would win the lottery Saturday. Never happened. Doesn't that make sense, though? You see that negative number printing, you're like, well, the potential's there. When my wife and I were dating, I took her out to dinner. We saw a movie. We smiled at each other a lot. The potential for that kiss at the doorstep was there. She didn't kiss me. So I couldn't brag to my friends yet. So don't trade potential. Let it happen, right? Your indicators are amazing. They tell you exactly what's happening. And this is only potential until that negative number prints. Every day, Safia. I'm the luckiest man alive. Until that number prints, it's only potential. Have you guys ever watched the market run one direction? And on your 5-1, there's divergence potential all the way up. All the way up, there's divergence potential, but it never comes to be. So that's why we're not trading that potential. We're going to let divergence print before it's true. I should have, right? Does that make sense, Safia? You were so worried about what could happen that you forgot about all the great stuff that was happening. That happens sometimes. Let me see where I'm at on here. Tony. Let's see what Tony did. Tony took the same trade, didn't he? Perfect entry into a termination condition. And then that divergence prints and he hops out. That termination condition, guys, if you trade into it, I'm not telling you don't trade into them. I'm telling you, you take away the advantage of a clear path. You have to make that decision. But I think that this kind of reinforces what I said. Don't great entries make manageable trades, guys? I want you to write that down on a piece of paper. Great entries make manageable trades. When you get in at the absolute best of the best spot, you've got wiggle room to get out when things change. And that's why your first 20 trade days should be focused on entries. Focusing on being able to get in at the absolute best spot so that as you grow with the software and that management plan comes into place, you've got a solid foundation to handle those trades. Let's see who's next. Gary gave us a post. Gary says, termination creates a full reversal. Odds favorable, no termination, smalls outside. Guys, that was a rock star long. Everything about that long made me happy. Thala, odds favorable, no termination. Didn't make it back to support. Jump in, jump out at the trouble spot, little momentum style. It pulls back. You hop in, hop out, making that money quick. And everything revolves around odds favorable, momentum, and a clear path, doesn't it? Everything revolves around that odds favorable and a clear path. You could do all right with it. Thala, are you with me? It's tough to take a momentum style short if there's no momentum. Remember that. Name your trades, guys. If your trade's name is momentum and there's none there, you might need to sit on your hands for just a second. Let's see where we're at. Coming through, coming through. That was me. That was Gary. That was Thala. Dun, dun, dun. Earl. Man, I love it. So once again, guys, odds favorable and a clear path is the precursor. Earl takes a momentum style trade, gets in, gets out before trouble, Easy money based on momentum, based on no termination conditions. Nice job, Earl. David B., I had LASIK about a month and a half ago, and I'll tell you what, it helped. I've also got a 32-inch monitor. That helps too. All right, Bobby T., let's see what you did, my friend. Everything set up, and you got run over. Man, I've done it. I'll take that trade every time. We talked about it in class every time. You're welcome, Earl. Earl, I love your trade. You and Ron and Ed, there's a few of you guys that really embrace those trades and do wonderful with it. And then Bobby, when this one doesn't work, you turn it into a momentum style trade, but it looks like you really do it before the momentum had hit. All your triggers are still up, your large are still up, your small are still above it. I think you got away with one there. But then when everything rolls, you take that. This was your trade, Bobby. This was your dag nabbit. Oh, no, that's just your stop. Never mind. You're good. Stop was good. And then that's your momentum try. Nice job. It's actually some great trading, Bobby. When things changed and all charts agreed, you look for an opportunity. Nice job. All right, Adam. Good triggers down, but huge termination condition. And you're looking at the short right here, I believe. And then you jumped in on the short with the confirmation. Adam, I know you're not using a 5-1, and that's okay. I love the look on the 13 too. But if you've got support, right, and you've got a mid-band and you've got large triggers a full bar away, why would you have the 21? How does that play into it? And then you go a 50-50 on the 13-2. This is the way my mind thinks. If it's 50-50 on the 13-2, I want this to be awesome. If this is garbage and says I can't go short, and this says that this is an area that may break but hasn't, and this gives me a big old reversal bar with a signal at support that no triggers have broken through. Are you following the line of thought here, Adam? I hope you're listening. Maybe you're trading. Those of you that are listening, does that make sense? If this is garbage and this is maybe and this is against me at an area with no triggers through, that's one that I might just stay out of. I might just say, man, I can find enough reasons, or waiting for a market flow signal from the area, and it looks like that's what you did, but it's just it's a tougher run there. If it works, it goes forever, right, Adam? And if it doesn't work, I think your stop placement was great. You didn't leave a lot on it. Nice job. You definitely had reasons. David L., let's see what you got, my friend. David L. says 50-50. Entered at the mid-band. This is a great lesson. David L., are you with me? What's an early entry, Tony? On Adams? Well, it's a little harder to read because he's using an 8 range. So he's got a 50-50. He waits for a market flow signal. The challenge is, where is it coming from? It's coming, I guess, pretty close to the area. So he gets a market flow signal. He enters after the signal, right here at about 03. And then he keeps his stop nice and tight above that signal. So he's using an 8 range for entry here, which means that there's a cost for confirmation without a doubt. He's not getting in at the area. He's getting in after a bar tells him to get into the trade. Does that make sense, Tony? It's not that it's an early entry. It's actually after it's already come in contact with the area, that mid-band, because he waits for this bar to print before entering. All right, David L. I love this. So we're going to talk about the gap theory real quick. Did that make sense, Tony? Okay, cool. A lot of times when people say okay, it means, man, I wish he'd stop talking to me. I don't get it, and I'm not sure that I will. So anytime someone types okay in the room, I like to go back for clarification. David L., we're going to give you guys a quick lesson on a termination condition. It's true, because I say okay when I just want whoever's talking to me to stop. If price pulls away from the synthetic triggers too fast and too far into a Fibonacci area, it typically snaps back to the triggers, guys. This is what we call the gap theory. So if price accelerates all the way into a midband and those large triggers remain a full bar away, it's very often going to close the gap to those large triggers. It acts as a vacuum. And if you take a trade right in the middle of that vacuum, it typically gets run over on its way to the large triggers. You'll see it go in both directions. Price reaches resistance. Those large triggers don't follow. It acts as a vacuum. So what happened on yours here, Tony, or David, I'm sorry, is price comes all the way back to support, all the way back to that midband, and the large triggers are still a full bar away. And if you look on your 5-1 chart, do you see how it closes the gap back to those large triggers? Guys, does everybody see that? When the triggers don't follow, this idea of the gap theory, that price loves to close the gap back to the large triggers, it keeps you out of this short. Because you know that chances are if I get in at 06, it's going to run all the way up to 18 or 19. Guys, give me a Y in the room if that makes sense to you. And you'll see it over and over. And this, I'm not saying that it's a long, I'm not saying that it's a short, I'm not saying that it's a way to get in, but what I'm saying is that even with odds favorable momentum, if I have that huge gap back, longs in here typically get chewed up. Shorts in here will typically get chewed up, and it may still continue down. Letting it close that gap to the large triggers becomes pretty advantageous. And guys, there it is right there. And if you scroll back right to the midband, we get to see another example of it. See how the large triggers refuse to follow? And it closes the gap right back. And maybe we've had a couple more. If you scroll back and look for patterns, guys, you'll begin to recognize it. Midband, large triggers don't follow, it closes the gap. Let's see if we get another one in here. Midband, large triggers don't follow, closes the gap a couple times. So it becomes a little bit of a safeguard, I think, and it keeps you on the right side of things. Does that make sense, David? Yeah, the large triggers, anytime I show those pictures, Bobby T, they're going to be from the 13-2. Always. But you know what's cool, guys? Is what do we wait for an entry? Are you ready? Remember I said patterns? Isn't this entry just a pullback to the large triggers? It closes the gap, snaps back to the large triggers, and when we have an area there, isn't it a great entry? The patterns that we talk about every day, guys, they repeat themselves on every chart. One chart we use to give us the overall advantage. The other chart we use to refine it down to an entry. Dave B., let's see what you have. 50-50 trade. You're recognizing odds favorable. You're recognizing odds favorable. You do have two divergences on a 50-50, right? The mid-band's outside of the triggers. As it comes back to the area, we've already lost momentum twice. Trigger lines can't get through it. Dave B., you just took a 50-50 trade. You took a trade where it had the potential to break. That was your small issue. Does that make sense? My small issue was that the area hasn't broken, but it has the potential to break. Well, then we start compounding the issues. At that same area that hasn't broken. Tony, have a great one. Thanks for posting today. We begin to compound those issues a little bit. Now your 8 range chart has a reversal bar from beyond the outer band at resistance that hasn't broken. It has divergence, and then it gives you a second reversal bar from an area that hasn't broken. So if you're going to use this one, then we get a loss of momentum, then we get a second loss of momentum. So when we talk about medium probability trades, guys, in this 50-50 trade, people either love it or they hate it. They either love it or they hate it. But what happens is they think that because the area has the potential to break, hell yeah, get in. But you've got to read on these medium probability trades, you've got to be able to get in and manage assertively, run it tight, understand the challenges. And if those challenges begin to compound, then you've gone beyond that one issue. I know because I loved this trade, and I did a lot of study on 50-50 trades to give me an advantage as I get into them. And it starts with having the perfect entry on the 5-1. This is your first shot at that medium probability trade. And then from here, you'll begin to use those other charts like Dave did to give you information. Paul M., you asked, would it be better to wait until it goes back to the large triggers before going short? And you're asking about David's chart, right? This one. Paul, at this point, do you have an area of support inside of favorable large triggers? It's not a high probability trend trade. And there's a couple things that I look at from this one, Paul. This is chart reading. I have a pivot that doesn't come from an area, right? So I don't have a termination condition creating this reversal, which means that my first line in the sand is that mid-band, is support. If you're going short here, you're kind of hoping that that breaks. So for me, I say let it break. Look how it closes the gap, and then we get another divergence, and it kind of closes the gap, and we get another divergence, and the trigger lines are rolling. There wasn't a short trade to be had here because this is a 50-50, but it's a 50-50 that's already had 3 divergences at support. It's a 50-50 that had a huge gap back to the large triggers, and all that happened is at this key area, the market starts dancing. Does that make sense, Paul? I don't have a rules-based entry. It's not that there's an entry from here. It's that this short becomes very low probability. And it goes back to that compounding. If one challenge is a 50-50, well, now a big gap creates a bigger challenge. Multiple divergences create an even bigger challenge. And it stinks, but sometimes the answer is just the advantages aren't there. And then you get guys like 10K coming through. He uses a larger chart, and his 21 says everything says up and there's nothing in the way and it has momentum, which means that for him, based on this look, 03 is likely to hold to the long side. Because this pivot didn't make the key area, and it pulls all the way back, and there's a huge gap back to those triggers. He says 03, 02 is likely to hold. So he says, if I come into this pivot stop out, I'm going to take a shot on it. All my triggers are up. My momentum is up on my largest 21.3. Gets in, takes quick profits on the gap back to the synthetics. And then as it continues up, off he goes. Guys, this is chart reading. And this takes some time to do. 10K, would you agree? This takes a little bit of time to do, to get to the point to where you can use multiple charts for analysis, but because of patterns, you can create expectations. And then from those expectations, you'll develop a plan that suits what you're looking for. The difference between a pullback and a reversal? Well, Paul, every pullback or every reversal starts with a pullback. Does that make sense? This is a pullback counter to the underlying trend, right? It becomes a reversal when the large triggers roll, the smalls are below. This is a reversal, but it's a reversal directly into termination conditions. So just because there's a reversal doesn't mean that the market's going to go down forever. We still have to respect those termination conditions. Does that make sense? He uses a larger time frame, the 21. The trend is up, the momentum is up, the triggers are up. So this is a pullback, a small retracement in price counter to the underlying trend. But this is using a 21 and a 13. So he's using the same rules for a trend trade, but he's stepped it up a level. Does that make sense? The 13.2 is to the 21.3 as the 5.1 is to the 13.2. He just did it on a higher time frame. He took a trend trade based on a higher time frame. And then here's our S&P directly into support. 1, 2, 3 divergences coming off of support. Here's a mid-band. Here's large triggers below. You guys want to see if the gap theory comes true on this one? Should we put a little circle where that potential collision course is if it decides to close the gap? It's not guaranteed to, right? It's not guaranteed to, but because I know that it's a possibility, I've removed an advantage. I love how that works. Guys, that's all it is. If then. If this happens, then I'll do this. If this happens, it's likely to cause this. So the light... Absolutely. So let's look at it in a couple of ways. So Shogun, price reaches support. Absolutely no trigger lines through. That says termination condition, right? 100% per the rules. That's really all you need. Termination condition. And this is like a supporting actor at this point. I already know it's a termination condition, but 1, 2, 3, 4 divergences says, hey, in case you missed that one, you Yahoo, here's another saying that this is likely going to stop that market. And then gap theory comes into play. We reach a mid-band. The large triggers are way below this reversal bar marker. Price may close the gap to these large triggers. It doesn't have to, but it may. And because I've seen this pattern 100 times, because I can scroll back and find it over and over and over, I can see that happen. I may say to myself, I don't think I want to try this mid-band long. I don't think I want to try this mid-band long because my study of the gap theory says that price is likely to close this gap. And that's chart reading in its most basic form. Oh, 10K, did I miss one? I'm sorry. All depends on what my rules say, right? 10K, you've got a loss of momentum as the trigger lines break through. And then there's that second loss of momentum, right? Let's read what you said. Anything can happen triggers means you don't have the advantage of momentum. Trig's pretty much below the fibs. Absolutely. Pretty much, right? Fibs are still blue. I don't care. 10K, I couldn't care less about the color of the fibs. I'm not going to lie. My concern comes from whether or not my trigger lines are through. But I've forfeited the advantage of momentum, right? Divergence, anything can happen triggers. Smalls are inside. I've got a clear path. I've got direction. But I don't have the advantage of momentum. There's my one issue. If you enter at resistance inside of favorable large triggers, it becomes a medium probability trade 10K. And if it does, this second higher divergence with the smalls inside becomes your management opportunity. Is that what you were thinking too? That's what I see. Once I give up the advantage of momentum, I know that I have to manage it assertively. But because it is a clear path, it becomes worth a shot with a willingness to manage. There aren't rules for anything can happen triggers. You're going to have to create those for yourself. And I know that sounds weird, guys. I don't have rules for anything can happen triggers. I don't teach rules for anything can happen triggers. I teach you guys to take a foundation that gives you 3 clear advantages that gives you a high probability win. We talk about what happens when you give up one of these advantages. You have to manage assertively. So 10K, because of the clear path, because of the downtrend, because of everything going in the direction, because of all of these below that area, I might take one shot at it, understanding that I've forfeited the advantage of momentum. So I'm not saying that there's rules. There's not rules for anything can happen. It's just a recognition that I don't have momentum. Does that make sense? And because of that recognition, I may need to manage this trade assertively. Shogun, stop reinventing the wheel. What does your 13.2 say? Yeah, 10KM, you just manage assertively, right? If you forfeit an advantage, you manage assertively. That's all it is. Again, it's a great read. And I think what happens, 10K, is that you had one challenge with that trade. It's when you start to compound those challenges. It's when you start to, it's when those challenges become not only the loss of momentum, but also the loss of a clear path. That's when things begin to get challenging, I think. In Shogun, I don't even look at a 21 because my 5-1 gives me everything I need. My 13.2 gives me everything that I need. I'm not smart enough yet to use a bunch of charts. It just confuses me. Do you guys know that? If I start looking at too many charts, I get confused. Because I'll say this chart says this, and this chart doesn't say that, and this chart says maybe, and this chart says, I don't know. So what am I going to do? I'm going to go to the chart that gets me in a trade, right? I'm going to ignore every chart that keeps me out of a trade, and I'm going to focus on the one here. So this is gold, and Cam, you took a momentum trade example, moving your stop a bit too tight, getting stop out, taking 40, not 340. Still don't have typed up trading plan. Write it out. You got to write out that plan, Cam. If then. So let's see where you got in. You got in with every chart saying up from termination conditions. And then when it cleared that resistance, you said, man, I sure hope it keeps going. And you put your area right on the area it's likely to retest. That's okay. Keep paying attention to this one, right? Yeah. Keep paying attention to this one. Because, Cam, where should your stop go? Where the market shouldn't. It's a great trade. I like it. You're just scared of losing money still. And guys, if you're scared of losing money, good. If you're worried about giving it back, you're going to give it back. Pretty simple. Gary, you say the issue is the midband, but the rules say take the trade? Okay. So Gary's rules say, even if the large triggers are below the reversal bar, I was hoping somebody would post this. Gary says with a termination and multiple divergences and everything up and everything strong, that's his trade, even with the split triggers. I don't disagree, Gary. So Shogun, you asked me, would I not take the pullback? I wouldn't take the pullback. My rules say be willing to miss this one. Gary's say take it every time. Different rules coming from the same foundation. Ron, termination, momentum goes up. Small bite, bigger fork. I like it. But you have to know why you're taking it or why you're not. Ben will take it. Terminations on every chart. Odds favorable. He'll take that entry. No divergence. Little early on the entry. Right to resistance. Ben, great trade. Done for the day, Ben? So how many repetitions does it take? How many times do you have to see a termination that creates a full reversal with multiple divergences to make you comfortable taking this trade and ignoring the gap? So what's your one issue? Your one issue is the gap theory. Do you have enough advantages in place to ignore it? That's what repetition does for you guys. But you have to keep it simple. You have to keep it focused. You need to keep it rules-based in the beginning. And then, guys, you're going to write out your rules. You're going to create a plan. The flat line on the 5-1 turned from blue to red. Does that mean anything? Where are we talking about? This one goes from red to blue. This one? It means that at one point it was behaving as support. It was behaving as support. And this line is coming from a different chart. This is a synthetic line. This is, I believe, from a 21. But don't get caught up in the colors. And let me show you why. Cool. We love to complicate. We love to add rules. Are you ready? I'm going to give you an example. What's your favorite color? Let's go hot pink. If that fib was hot pink, all the trigger lines are still below it, right? It's still a termination condition. What if it's yellow? Only the smalls are through. It's still a 50-50. And what if we make it black? Well, once everything gets above it, I'm from the 80s, Ben. That's hot pink. Once everything's above it, no matter what color it is, the area is broken. Does that make sense, Shogun? I can make every fib on this chart polka dot, and it all comes back to trigger reading. Yeah, I know. It all comes back to reading the triggers when the area is reached. So it's the same thing. Shogun, doesn't matter, does it? Nowhere in the rules does it say, make sure that your 5-1 fib is this color, make sure that your 5-1 fib is that color. Nowhere in the rules does it say. And I know we love, love, love. It's not. It's the same fib level, but because of the conditions being met, it went from acting as resistance to acting as support. That's all it is. That's all you're seeing, but you still rely on the trigger location. So resistance breaks, acts as support. Support breaks, acts as resistance. Support begins to break, acts as resistance. But it all is determined by where the trigger lines are. Price reaches resistance, no trigger lines are through. Guys, do you see what's happening right now in in crude oil? Resistance is held, support is held. Congratulations, you have just successfully recognized an area of consolidation. Next-gen users, because of Fibonacci, because how accurate these levels are, you can say to yourself, I'm either going to break above this area that's been acting as a termination condition, or I'm going to wait for everything to break below. Maybe. In Shogun, what you might get is this 50-50 that doesn't work. So you're waiting for that clear path, either above or below, to give you the highest advantage. Does that make sense? Becomes easy to put yourself into a holding pattern. Small's above the large. Large or wide, they're angled in the direction of the trend. 50-50, right? Area may break. May not. Here's my highest to my lowest. I suppose technically, there's that window of opportunity on an area that hasn't broken but has the potential to break. Exactly. Shogun. Look for strategy outside of consolidation. Watch this. Look for momentum. Look for a clear path. And then look for an entry. Isn't that easier? Isn't that easier saying for search for a strategy outside of consolidation? Look for a trigger line that creates a blah, 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 blah. No, just understand that this is your momentum, right? That's the first part of the recipe. When all the trigger lines get above it, then you have a clear path. And then we look for an entry. Yeah, so Shogun, again, to get that picture of the three in your head, doesn't it make sense? Spend an afternoon looking at all these pictures, right? Go to the tutorial section. Watch a video. Thala, I'll do it for $1. Shogun, I did all the work for you. And I'm just kidding. I'm going to give it to you for free, Thala. But if you follow this link, Nexgen gets credit for it, so we appreciate that very much. It's right off of the tutorial page, or right off the education page. It's not giving me the link. Hold on. There we go. And that'll get you there. Are you ready to do it, Thala? Are you ready to sign up that Apex? You're like, I'm a chart reader 2 weeks in. Bring it. I love it. And what a smart way to do it, right? Why risk your money? Go after other people's money. Test your plan. We'll talk about that. So what I'm going to do, guys, is I'm going to leave you with the market. Let's see what this 50-50 does. I'm going to come back, and then we're going to go through, and we're really going to kind of outline your plan of attack. What's going to get you to where you want to be the absolute fastest? If you take a trade, post a picture. If you want to post a picture and tell me what you see, I'd love that. Doesn't even have to be a trade. I'll be back in about 5, guys, and we'll finish strong. Back in a minute. "30 minutes left. Is it just me, or did it pull back to support inside of favorable large triggers?" Oh, no problem, Christina. Great to see you in here today. Have a great afternoon. What do you think, guys? There was the top of the window. Bottom of the window was down here, and it got you right in the middle, didn't it? These patterns repeat themselves over and over. Your job is to get comfortable with the momentum look. So what happens, Shogun, is on Apex, if you have that save 80, it will renew at that save 80 for the entirety of your relationship with Apex. So for example, you can control $50,000 for $34 as opposed to the $167 or whatever it is that they normally charge. Safia, beautiful. 50-50, perfect entry, a tick or two above support. Quick profits on the first one. That's a $300 trade, Safia. Feels good, doesn't it? Nice job. Telling you guys, your successes make me giddy. Watching you guys do the study, watching you guys learn these looks, practice these looks, get your confidence. I get excited for you. There you go. Shogun, stop thinking about the money. Focus on the process. The more you focus on money, the more you're going to struggle to find it. It is just, whoops, that's the wrong one. It seems to be a fact of life. All right, guys, John Novak and I came up with this one morning. We were talking about, let's give the brand new users something that's on one page to look at that's going to help get them where they want to be. That's going to give them clear, concise plan of attack. And this is what we came up with. This is the collective brain child, or whatever you call it, of John Novak and I one Sunday morning sipping our coffees from 3,000 miles apart. To minimize your learning curve, post pictures of your trades in every class. Brain trust. Thank you for that, Paul. I knew that that was actually a brain fart on my part. Post pictures of your trades in every class, or post every of your trades in class. Every trade, win, lose, or draw. Right? Win, lose, or draw. Post it in class. Who's ever withheld losers because it was embarrassing? Because you knew that you broke your rules, because you knew that you did something wrong, and you're like, I'm not going to post that loser. What will the world think of me? Done it. Guys, if you win and the rules are wrong, you may have a short-term victory, but a long-term failure. How are you going to know the difference? If you're brand new, how are you going to know the difference? To be sure, you need feedback from us. We're here to help. And it says us because it's not just me. John Novak comes in this room, and when he's in a teaching mood, he will go off on your charts and show you all these different things you never thought of. If you place a trade on the simulator, you participate in class, there's zero risk of loss of capital. You need someone to tell you what you did right or wrong when you're new, and this is part of the educational magic that Nexgen offers new traders. If you've been in this class more than a week, you understand that you get live feedback 15 hours every week. And everything that we do is dedicated to making your job a little bit easier. Yeah, Cam? So use this outline for education. Post in class, track your real-time performance. Guys, learn the rules for when it's okay to trade. Simulate, don't practice the wrong rules. Simplify. Replay the day, fix your mistakes, take pictures of the correct trades. Repeat this process every day. Exactly, Ben. And then once you guarantee yourself you can win, that's when you start thinking about money. Populate your spreadsheet using the checklist. Guys, I put the checklist in the room. I put it in the room about 10 times every day. Here it is again. If you haven't taken the time to download it, to print it out, to put it on your desktop, well, you're doing yourself a disservice. Post your trades in class with entries and exits, with the rules annotated or copy-pasted on the chart. Once again, guys, here's a picture. How do I annotate to get the best feedback? Paul, I don't have a crystal ball. I have no idea of what the market might do. I have zero idea. Do you know what I see, Paul? I see a termination condition. And I see a termination condition in an area where the market is consolidated. And I don't give two flips about what this market does until this area breaks. Can we agree that the pressure is up? The smalls are up, the large are up, every trigger line says up. Or are they going to break just a little bit above this pivot stop out and the sellers are going to come crashing down? I have no idea, Paul. So I'll just wait for my rules to be met. Study historical chart setup. Circle those tails, guys. Use the pictures generated in the live class. Grab them from the Discord channels. Create at least 15 images a day. 15 images a day is 30, 60, 75, 150, 300 pictures a month, guys. At the end of 90 days, you could have 207, 900 pictures? Math escapes me. You could have 900 pictures at the end of 90 days. Present them in class, annotate them with your checklist. 15 hours a week, Monday through Friday. You'll receive feedback on your ability to follow your checklist. The ones that follow the rules, put them in your spreadsheet, right? Keep doing it until it becomes second nature. Did everybody get a copy of my spreadsheet with 130 pictures of high probability trend trades? I hope so. There it is again. Guys, once you create these entries, this database of entries, now you're going to define your management plan. Initially, a mechanical approach that eliminates emotion or opinion tends to be the most straightforward approach for new users. You can alter your plan when you're done with education. Guys, you are not bound to the same plan on day 1 that you are on day 30, 60, 90. Your plan will change as your ability to read your indicators changes. And then here's the most mechanical approach that I've ever seen for new users. Because you spent 2 weeks, 3 weeks focusing on your entries, you're still learning to read your charts, right? You're still learning to understand change in the moment, to identify challenges. So if you trade 2 contracts, the initial stop will be 12. I think so, D. You have 1 day, 12 hours, 20 minutes, flat. Literally a countdown for you there. That's kind of cool. And you want to know the truth? Is they're probably going to do it again next week. But do you want to risk it? God, if you're trading 2 contracts, the initial stop will be 12 ticks. That's what you're going to put into your ATM. Whoops, Discord just booted me. I really think it's just John Novak over there messing with me. He's like, watch this. I'm going to shut down Mark's classroom again. All right. We're almost there. Who kicked out the cord? Guys, your initial stop is 12 ticks, adjusted above or below the window of opportunity. You have to understand the window of opportunity to put the stop in the right place. Move it 2 ticks above or below the reversal bar in the direction of the trade. First profit's 100, at which point the stop moves to break even. The second target will be 200. Guys, this is taking the absolute most basic. Here's your entry. There's your stop. There's your targets. Reversal bar, the stop moves. Target hit. Target hit. Guys, this is your most basic plan. Allow yourself 90 days to practice the mechanical approach, and then you can adjust your targets based on experience. And there it was. It broke out, didn't it? We defined a range, waited for the breakout, waited for the odds favorable, waited for the no termination, And Paul said, you know what? I'm going to look for an entry because my rules are now met. Didn't get filled. It happens. All right, so you've defined your entries, you filled out your spreadsheet, you've practiced mechanical approach, you're getting experience, you're comfortable with what you're looking for, and you've put pencil to paper, Cam, and you have this plan that's proving that it wins more than it loses. You've proven that you're capable of following your rules. You hear me, Cam. Put that crayon to paper. Write down what it takes to get you into a trade. Write what it takes to get you out of a trade. And guys, here's the hard part. Accept that you may be a less capable trader than you initially believe your first time out. Everyone feels entitled to win. I know that I did, but only those who trade well do. Before risking your capital, test your trading plan using a prop firm such as Apex. They run sales all the time, and for less than $200, you can trade up to 50,000. Good job, Cam. I got nothing but faith in you. You know that. Guys, this Apex Trading Fund will make you prove that your plan works. And if it does, they'll fund you. You just signed up? Awesome. So here's a copy of this once again, guys. Read through it a couple times. Look at the pictures. What do you think? Paul, rules-based entry. Smalls above the large, didn't reach the area. Smalls outside. Area of support inside of favorable large triggers. The market's not obligated to come fill me, guys. Salvia, you're at this in the curve now. I love that you have this picture. That's exactly where you are. It takes a little bit to get through this, but once you get here, doesn't it feel good? You have this clarity that you didn't realize was possible. Gary, 21 says pivot stop out at support, strong triggers. You're waiting for that breakout. Just saying, man, give me that clear path so I can make some money. And Paul, you move up and down that curve on a weekly basis. You do not. Let's talk about this curve real quick. In the beginning, looks like fun, right? You're like, yes, I'm going to make all the money. You have to, Thala. You have to use Rhythmic. They'll send you information about everything. And then if you need help with setup and stuff like that, there's so many people here that can help you. Looks like fun. And then, holy crap, this is hard, right? You're like, oh my gosh, I've got to learn stuff. They're not just going to give me money. Nice, Safia, I love it. And then you get this, well, I'm not sure what I'm doing, but man, I've been in class long enough. There's no doubt in my mind that the potential for me to make money is there. All I have to do is follow these rules. And you're like, I'm brilliant. It's been 3 weeks. I'm a freaking master. I'm brilliant. And guys, this is where people go live too soon. They haven't written a plan, right? They haven't presented in class. They haven't used a spreadsheet. They haven't written out their rules. They're not even sure what they're doing. But they got lucky on simulator a few times. They practiced that long-term failure. Because when I hit the now I get it stage, Thala, I'm talking about me. I lost $5,000 in about 22 trades over the course of 2 days. I was convinced that I was the smartest man in the world because I got lucky on simulator a couple times, and I should have just thrown it into a barrel and lit it on fire. At least I would have been warm. $5 grand in 2 days. And Thala, my brother, wrote the software. My brother is the CEO of the company. My brother was willing to give me all the training that I give you guys. He said, all you have to do, Mark, is take pictures and post in class. I'll get you exactly where you wanted to be. To which I said in my best sibling voice, to heck with you, John Novak. I'm freaking brilliant. Didn't you realize that? And then I came down to the I don't know shit stage. And guys, it's humbling. It's humbling to go to that stage because you realize, you know in your heart of hearts, without question, guys, this is the best software in the world. The training is amazing. Thank you very much. But you have to learn how to use it. Guys, I could give you 1,000 pounds worth of weights, but if you never pick them up, you're not going to get any stronger. And then you start on this path, and it's going to be 2 steps forward and 1 step back, and 2 steps forward and 1 step back. And you're building trust every day. Shogun, you don't need $5,000 for when you go live. Because you know what they didn't have when I went live? They didn't have prop firms. No. Guys, don't lose your money. Use the prop firm. Use other people's money. One of the biggest challenges new users have is they lose all their money and they're out of the game forever. If you use something like Apex, guys, if I go into Apex and I go absolutely apeshit, pardon my French, and I blow out the account, I'm out $110. I'm not out $5,000. I would have to blow out Apex 50 times to match the losses that I got trying to trade my own money. And guys, when you're on this path, you're going to make mistakes. You're going to get smarter, right? And on this path, you're going to create the perfect plan for you. Trading is just like golf, Cam. If you don't focus on the mechanics, you're never going to get a birdie, right? If you don't focus on the mechanics, you're not going to be good at it. Guys, my sole purpose in life is to teach you the mechanics. Is to get you comfortable so that you can create a plan. I'm not creating your plan. I'm giving you something to do that's been proven to make money while you create your plan. So now we do this. In the beginning, everybody likes to talk in the room and nobody likes to post pictures. So turn that typing into pictures, right? Turn those questions into pictures. Start your catalog of what you see every day. Cam, you're right. I tell stories a lot. Cam, I'm sure you've heard this story. Guys, 3,800 pictures in my catalog. This is from October, I think. My earliest picture is from October 17th. Almost 4,000 pictures in there. I used to road race motorcycles, guys. And when you road race motorcycles, they separate the classes. You have your expert class and then you have your novice class. And I had an expert tell me, he goes, the only difference between an expert and a novice, it's not how fast you go or how well you ride the motorcycle. It's how quickly you recover from mistakes. Do you let one mistake turn into 10 mistakes, or do you recognize that mistake, fix it, and move forward? Because everybody makes mistakes. Maybe you're tired, maybe the sun got in your eyes. So it's your ability to recover, to say, hey, you know what? This wasn't the best trade because the trigger lines were inside and it was 50-50, right? This wasn't the best trade. And rather than taking it again and again and again, I say, well, crap, I'm giving away advantages. I have to hang on. I'm glad the stories stick out. I've got a lot of them. I've got so many stories. But they're all relevant, I think, and everybody has their own story, right? Everybody has that thing that makes sense to them. The way it clicks, it's either what I say or what you hear, but it all works out. So Safia, you signed up. Thala, you signed up. Guys, remember that over here in, let me find my Discord. Over here in the main section on Discord, I hope you guys are using this too. There's the traders chat. And there's a lot of people. Posting what they do with the software, but there's also a lot of people talking about, yeah, they're talking about Apex. People in here are more than willing to share their experiences with it, I think. Remember, guys, I'm not an Apex expert. I work for Nexgen. I use Apex. So I'll be as helpful as I possibly can. But that traders chat room is going to be probably one of your best spots for information. Or Apex themselves is probably going to be your best spot for information. But what you can do is you can take that one account, turn it into 20 accounts, spread your risk out, and just focus on one trade. Good stuff. How'd we do today, guys? Anybody learn anything? Trading is an individual sport. It doesn't matter what I do. It doesn't matter what Safia does. I couldn't care less what Thala does. I've got to worry about my plan, my rules, my entries, my exits, right? And then you present me your rules. Not everything yet, though, Shogun. You've been here 2 days. What are you doing? Remember, guys, it is very much an individual sport. And it's imperative that you focus on your success, that you write out your plan, that you talk about your rules, that you share your rules with me, right? Show me your checklist. Show me your pictures of your best trades, and then post everything in this room and let me hold you accountable to your plan. And if I see something, maybe not. Gary, where's your lack of trust on this one? Was it the 50-50 trade with 3 divergences? Was it the weak triggers on your 8 range? Was it getting to the wrong side of everything? Is it possible that you read your charts perfectly, but because the market started up from the area where you put the Y, you think you did something wrong? This is how we'll end the class today, guys. You ready? I'm going to take a picture of the picture. Guys, until you trust your rules wholeheartedly, you're going to second guess yourself over and over. Is the area broken? Or does it have the potential to break? Potential to break. So Thala, there's issue 1. My first issue is that the area has the potential to break. What do 3 divergences tell me? They're still going up, but now there's potential, right? Isn't this issue number 2? That may stop the market. All right, now hold on. Yep, small triggers inside of the large triggers. That's issue 3. You guys see it? And then just for grins, in case 3 issues wasn't enough for you, this is the bottom of my triggers to the top of my triggers. I've got a 5-point window of opportunity. Gary, did you miss a trade? This is what chart reading does for you. Guys, this may go up and go to the moon. But if I have 3 issues in the same spot, I value my account more than that. And that's just me. I'm willing to miss. And here's the hard part. I'm willing to miss trades rather than give away an exponential amount of advantages. If I showed you just this and I said, hey, you've got 3 things wrong with this trade, it's a maybe trade at best. Just from me telling you that, what would you say? You'd say, well, I'm not taking that trade. That's ridiculous. Who would take that trade? And then you watch the market and it goes up and you go, oh, I have to take that trade every time. What do you think? Third divergence lower, right here from resistance that hasn't broken yet. That's a potential. Or the other potential is that it just rockets up to the moon. I don't know. But do you see how that works, guys? Let your chart reading help you make decisions about whether or not you're willing to take a trade. David, I'm not sure what we're going for here, but let me show you this. Let's talk patterns. Pivot not from an area directly into support, continues back up. Pivot not from an area directly into support, and then it finishes the move to Fibonacci. You should scroll back, guys, and see how many times this happens. 50-50 with a huge gap, not likely to work. Perfect termination condition. Everything rolls, finishes the move to the next level. I love this picture. David, I'm not sure if that's what you were showing me, but that's a great picture. Look at how price dances at these key Fibonacci areas. So let's play if then. Sticky spots. If price continues up, if the trigger lines stay strong, and I take out these divergences, well, let's look for longs, right? If this third divergence prints, it may push lower. I don't know. Guys, I've got enough conflict right here to keep me sitting on my hands. That's what I call a make a sandwich pattern. Here we have a clear path now, don't we? Who took the trade earlier? I don't have the best trigger look, 10K, but I do have a clear path. Everything says up. This is the area likely to hold in the event that I get a pullback. This is not a high probability trend trade, is it? What do you think, guys? Not a high probability trend trade. This would be one of those medium probability trend trades, which means that I'd have to manage it assertively. It may not even get a pullback because I don't have the advantage of momentum, Thala. I've got smalls that have returned to the large. I've got smalls inside of the large. So that's my one issue, right? Yeah, I've given away the advantage of momentum. My high probability recipe calls for momentum, a clear path, and an entry. I don't have momentum in its best form, but I do have a clear path. I do have an area inside of favorable large triggers. I've got 2 out of 3, which makes it medium probability. Apex saying they will not extend the sale. That's awesome. David L. Everything says up. You get in at the top bar. David L. is counting on no pullback with everything going up. Whoops. Back in a second, guys. Ah, where's my education room? There it is. Okay. On my way. Hold on. Here I come. Don't panic. Almost there. So David L. Whoops. It didn't let me keep that picture. Here we go. David L., do you see how your stop is at an area of support inside of favorable large triggers? But in your head, you're saying it's 12 ticks, right? Stop should be at 12 ticks. 12 ticks from the right entry point. You've jumped into the trade. If this market decides to pull back, you're going to exit this trade right at the spot where it's most likely to continue. Does that make sense? If it pulls back, yeah. So you're chumming the waters. I love it. Because for me, David, your stop right here almost guarantees that I'm going to get an entry. Yep, Cam, same thing, right? John used to tell me, Mark, put your stop where the market shouldn't go. That's got to be on the other side. Shogun, why doesn't the area turn green on the 5-1 ES since the small triggers have flipped bullish long time ago? Is it not green? Am I missing something? It's green everywhere, isn't it? Oh, the ES? Because you get a trend change, Shogun. On a chart when the smalls cross the large. Smalls cross the large, that's what gives you the trend change. Has nothing to do with the direction they're going. Has everything to do with their location versus the large triggers. So this chart won't turn green until these small triggers break above the large. Make sense? And David, did that make sense for you, I hope? At this point, a lot of people are rooting against you. And it may just go up. John putting in 32 charts for your viewing enjoyment. Says up, says up, says up, says up. And I'll be darned, it says up. It's a tough ES spot. Why? Because it's a 50-50 on the 13-2. Because your smalls are below the large. Because your smalls are below the large, but the overall is up. And it's a trade that, because it's not high probability, will be managed assertively. And John's ability to read charts, I assure you, is pretty phenomenal. Allows him to manage assertively. But here we go. There's a third divergence in the same location with the smalls below the large. Area with the potential to break. Do you see how that works out? He took a shot because of this in a smaller chart. Gave me information. John, it's a great trade and great management. Paul from last night. Consolidation. Breakout says up. I'm assuming this was your perfect entry. Pull back right to the small triggers. Oh, that was your short. 3 divergences, smalls below. 2 divergences, perfect entry. 3rd higher divergence, manage out, right? I love it. Great entries make manageable trades. Guys, you have overrun me today. John Novak, I need overtime today. They wouldn't push me to the 12:06 hour. Guys, great class today. Great questions. I think you guys posted a lot of awesome pictures. I love this. 3 divergences. Guys, it's okay. That's what you call trading your indicators, not trading hope. Thank you, everybody, for posting your pictures, for asking your questions. For those of you that are new, thank you for being a part of this. This is what we do every day. Every day we're going to talk about rules and reinforce rules. Every day we're going to look at what you do. We're going to talk about what you do. Every day I'm going to remind you to write a plan. Every day I'm going to remind you to post in class. Every day. We're going to do this until you get comfortable. And then we're going to keep doing it so that you can continue to grow. Guys, thank you so much for being a part of my classroom. I'll be back tomorrow morning at 9 a.m. Cam, and this isn't just for Cam. If you write a plan, if you say this is what it's going to take to get me in the market, send it to me if you want me to put eyes on it. But do me a favor. If you send me a plan, don't send me my plan. At least change it enough so that it's your plan. Don't do what I do. That's not my trading plan. That's an example of how to write a plan. But email it to me if you want me to put eyes on it. I'll be happy to. And guys, I will see you tomorrow morning. And we'll do it again. Thanks for being here today, guys. Everybody take care.